OFX, what's popping? So today I want to do a video about courses and why you don't have to buy a course. Um, I don't sell anybody anything, nor do I plan to. I don't have a course. I have Signals, it's free. I have a Discord, it's free. Everybody on social media now wants to sell you something, so they have a lot of incentive to create certain types of videos, and we'll check out this video because this is exactly how I trade as a beginner. 2 weeks later they make the same type of video but a different strategy. They have a lot of incentive to fabricate things because they need your money to, or they need your money from what they sell to survive and to pay their bills and to promote their flashy lifestyle. But there's me and there's other people like Nick Sean. There's a few other people out there that I've seen that Nick Sean does sell things, but he doesn't. He puts everything out there exactly how he trades. He's just like, if you want actual personal mentorship, which I think is what it should be. You know, he obviously makes good money and he does what he does, and I respect him. But I just want to do a breakdown of exactly how to trade. And if you don't want to buy a course, you don't have to. You can learn exactly how to trade on YouTube. It's going to take a lot more digging and time. You know, you're going to have to search through a lot of things to figure out a lot of videos of how to figure out how to trade. But if you want to learn how to trade, you can watch this one video and get a pretty good gist of it. So the first thing you need is the trend. Okay, and what you need to do is you need to go to the daily, the weekly. The way I trade is I'm a swing trader. I use the daily for the overall trend. Okay, and now with that, what that looks like is if price is going up, the way you tell how it's going up is if price is consistently making higher highs and higher lows. Okay, so what happens is this high is higher than this high, this previous high. So now what this is considered is a higher high. Okay, now this low is higher than this previous low, and that's now considered a higher low. And this low is higher than this low, so this is a higher low. It's as simplistic as that. Okay, so as long as price keeps doing that, it's not usually, sometimes, but it's not usually going to look as pretty as this, but this is just, you know, a drawing. But that's what it's going to look like. You're going to need higher highs and higher lows, and the way you find that is on the higher time frames, on the daily, the weekly, if you're a swing trader. If you are a scalper, it'd be something probably, I mean, it depends what time frame you're looking for your entries for. It'd be maybe the 15-minute or 30-minute, depends. If you're an intraday trader, it'd probably be the 4 hour. But that's just what it is. And on the sell side, it'd be lower lows and lower highs. Okay, so check this out. This low is a lower low because it's lower than this previous low. This low is a lower low because it's lower than this previous low. This lower high is a lower high because it's lower than this previous high. Okay, that's literally it. That's as simplistic as it gets. Okay, now at the same time, the second thing that I do is I look for support and resistance. Now, when it comes to support resistance, I'm going to abbreviate it, put SR, support resistance. You can kind of look at those as a level of a floor and a level of a ceiling. Okay, so if I was going to copy and paste this over here, what you have to understand when you're doing this is if price is going down, you want to look for levels of resistance. Okay, so this level of support right here that rejected, it came up and it broke through. Now it can be a level of resistance. Okay, same thing right here. Price at a level of support that it created, came up, came back down, broke below it. Now it has a level of resistance that can be created. Price came up and you're expecting it to reject it. As simplistic as it gets. Support or resistance. Now the vice versa, the opposite way, is the same thing. It's like, okay, well, let's do this like that. Price had a level of resistance and then it broke above it, and now we're expecting it to test as a support. And then the same thing right here. Price has a level of resistance and it broke above it, and now we're expecting price to come back down, retest it, hold this level, and then go up. Okay, as simplistic as it gets. Now the third part, which you need to know, is how to enter. So I use limits. I use buy and sell limits. Now if you're going to use this example again, okay, if price is coming up to this level, it's going down, I want to sell, I have a resistance level, everything looks good, what I'm going to do is I'm going to put my limit, my sell limit, on the level. And what a sell limit is once price touches this area, it'll automatically enter you in the trade. You can already have your parameters set. My stop loss is here. My take profit is here. So everything's already set. You don't have to sit there and wait for price to get in there for you to enter. It's already good to go. Now, the way I always find my entries is I put my entries on the bodies of the candle. Okay, so the real level could be something like this because there's multiple wicks down here. But for some reason, it seems like a lot of the time, majority of the time, price likes to go to the bodies of the candle. So I put my entries on the bodies of the candle so I get the best entry possible. My stop loss is always going to be above the previous high. And then you can target whatever you feel is viable. Okay. So if that's a 10-to-1 and you want to go for the negative risk rewards, if you want to go for a 2-to-1, if you want to go for a 5-to-1, if you want to go for a 1-to-1, whatever you feel is applicable and whatever you have back tested works for you psychologically and for your strategy, that's on you. You can do whatever you want. And it's the same thing, just the opposite way. It's like, okay, well, price is right here. Okay. Once price gets down there, I'm going to have a buy limit set. Price is going up. It has a solid level of support. Cool. Now I have my stop loss below the low, my entries on the bodies, and I'm going to target whatever I feel like I want to target. That right there is all you need to be successful. This right here is enough to make you money, and I just saved you $500. You're welcome. You can go on the charts, you can backtest this, and you will see exactly what I'm talking about. Use the daily for direction, the 4-hour for levels, support resistance levels, or you can just do everything on a daily if you want. You can do every single thing on a daily and make it even more simplistic, okay? So now, the first step, right, is to identify what the trend is. You have to figure out where price is going. So if we were going to go to this daily chart, let's look at it from this perspective. Let's say price hasn't gone past this point. So let's say we're like right here. Okay, let's go back. Now, if you were going to look at this, look how price dropped, lower high, dropped that's crazy bearish momentum. Okay. And now there's this tool that I like to use sometimes that is called date range. Now from here to here, let's look at this. Here to here is 380 days. Okay. Now, if we're going to do the same thing from here to here, that is 728 days. Look at the difference in how far this moved and how far that moved. Tells you a lot about price and where it's going to go, right? This push to this push was 2,000, almost 2,500 pips. This to this was about half of that, but it took about double the amount of time. That tells you a lot about where price wants to go. Okay. So let's say you find that out, and then price comes up here, rejects this level, starts pushing down. Let's see how it made multiple lower highs and lower lows along the way. Push down, lower high, push down, lower high. Okay, well, we can probably start doing what I was just talking about. We can sell, right? We can have multiple sells. We can sell at these big levels of resistance. Okay. Price is going down. We think it's only going to go down, so we're only going to look for sells. Okay, cool. Look at that right there. Look at this right here. Look at that. If you would have taken these trades, you would have made money. Okay, look at this one right here. Right on the body, that wouldn't have hit, but this would have came up and it would have hit. You'd be in trades. Now look, check this out. You enter these trades. You say, okay, I'm going to put my stop loss above the previous high right there. You're not getting stopped out. I'm going to target this next low. I'm going to target this. I'm going to target this. Whatever you want to do and whatever you think is viable is what you can do. But that's for you to find out. But I'm telling you how to get these entries, and I'm showing you. Look at all of these entries. Look how simplistic that was. Price is going down. It breaks out. Cool. These are on the daily. You guys got to remember this. This is on the daily. So this broke out. It took 24 hours. So what happened was 1, 2, 3, 4, 5, 6 days later is when it came up to test this level. You had 6 days to put this limit down. You're not going to miss this trade. If you're on the charts and you look at it every day just to check, you're not going to miss this trade. The same thing with this. Price broke out of this level. 1, 2, it might have even hit it right there, but let's act like it did. It might have. I think it did, but whatever. 1, 2, 3, 4, 5. Okay, that's a whole bunch of candles. 24 days, over 3 weeks, right? Almost a month it took to get back up there. Guess what you would have done? You could have had an alert to let you know when it gets back up there. You could have, I don't know, you could have just had the limit set the entire time, whatever it is. This one, even the same. It took even more time. Look, came up and retested it. Came up and retested. This one was pretty quick. Broke out 1, 2, 3 days later. It's in there. But you guys get what I'm saying. This is exactly what I'm saying. Look how simplistic this can be. It doesn't have to be difficult. You don't have to spend $1,000, $500, $200, whatever, on a course. You can just do this. Look how price came up here, had a big strong push, lower high, big break below. You could have entered right there. Look how far that went. Look how easy that was. Right? How about this? How about price push below right here? We have to acknowledge the losses because nothing's ever going to be perfect. You would have lost that one. Or if you would have had your stop loss, nope, you still would have lost. That's beautiful. That's fine. It's life. It happens. Okay? What about this? Price push down, created a lower high, push down again, right here. You could have had that win. You could also have had another win right inside there. Hey, how about this? You would have had a loss. That's great. We lose. It's life. We're human beings. Okay, what about this? What about this entry right here? Right? What about these entries right here? This one, your stop loss above the high, you're not losing that one. How about this one? Boom. Dub. How about this one? Right? How simplistic and duplicatable is that? People will charge you $1,000 to come learn some shit that they're not even profitable doing, which is why they're selling you something. Number one. Number two, it's this simplistic. The reason why I never want to charge somebody to teach them, right? If I'm like making videos, I'm not gonna make a course or anything, is because why the fuck would I? I mean, it took me 2 minutes to draw this out and show you how to trade. I feel like I'm ripping people off. It's so simplistic. The reason why nobody really profits doing this shit is because it's not easy. The strategy itself is easy, but that's 5% of the battle. 95% of it is mental, and it's extremely difficult to make money in these markets. It's extremely hard because the mental side of it is extremely hard. It's not this. This is easy. I'm not going to charge anybody for this. Okay? But if people are confused on how to make money, it's like, well, look at how simplistic and duplicatable I just made that. I could go to any, let me just scroll some random pair, right? It doesn't matter. Whatever. Let me do this one. Whatever random pair. Don't have this planned out. I'm just going to go to some random chart. Look at how price is just beautifully trending right here. Beautifully trending right here. Those are the markets that you want to stick to. Okay? If you're going to look at these markets, excuse me, that are just perfectly trending in a certain direction, why would you trade anything else? Why would you trade any other markets that are confusing? You don't know where they're going. You don't know what they're doing. Why would you do that? You have this right here. Could have had a win right there. You would have had a loss right there. That's completely fine. How about this? You would have had a win right there. How about this? You would have had a loss right there. You would have had a win right there. You could have had 2 wins. Price comes back up, touches that again. You could have had another win right there. Okay, let's see. You could have had a win right here, win right here, win right here, right here. You see how simplistic it is and how duplicatable it is when it just starts flowing. Price just starts going, right? It's great. You could have another one right here off of that little candle right there. This, right? This. How easy is that? At the same time, what if you are not just doing break or retest and you're taking trades? Okay, well, price is going down. I'm just going to sell every resistance. It doesn't necessarily have to be a support into a resistance. What if you sell multiple times up here every time price comes? Now that opens up a lot of doors to get more trades. Okay, what about those sells right there? Okay, what about these sells? What about these sells? You would have lost this one. That's fine. Not that one. And you just go with price. You say, okay, well, every time price breaks a floor, I'm going to sell. And that's all you're going to do. And that's all you need to do. Look at this. Look at how many times price tested this resistance. All you put was a limit. You're like, okay, hey, price has rejected this level. I'm just going to put a sell limit, right? I'm going to target that, or I'm going to target down here. And my stop loss is going to give it enough room to breathe. And that's it. And that's all you do. You just put a limit. You don't even have to be there when it happens. How about that? How about the fact that it came up and did it again? 1, 2, 3, 4. You could have had all these sells just in this level. Eventually, what would have happened is it would have broke up above. If you're doing negative risk reward, you would have hit this one too, right? If you're doing something like this, you for sure would have hit that. But that's it. That's all you're doing. And then price eventually it flips, right? It goes up here, it creates all these higher lows, has really strong bullish pressure. So then, okay, now I'm just gonna start looking for buys, and you just look for every single buy you can. So now you flip, and you start looking for support buys. Okay, look how many buys you could have got in this area, right? And then look how every time when price started to move, you could have caught buys off of support levels, right? You could have got buys right here, off of this level, and that candle. Price started pushing up. Now look, you got buys here, you got buys here, you got buys here, you got buys here, right? That's it. That's all you do. You go with the trend. You find out where price is going, and the only way that you can be sure where price is going is chart time. You have to practice. You have to backtest. You have to just study, and you have to see the patterns that consistently repeat in the markets. Then what you do is you draw out support resistance levels. The key factor to this is stuff like this. Look how much price wicked above. Look how much it wicked above right here, okay? The factor to this that you have to figure out is how big of a stop loss to have. The biggest reason why a lot of people get wicked out or get stopped out and lose is because they're trying to do something like this. They're trying to get those humongous trades every single time, right? And the higher you go in risk reward, the more inconsistent the win rate's going to be. So yeah, you might hit this one time, but then you might hit it again 5 trades from now, or you might hit it again 15 trades from now. The beautiful thing about a negative risk reward is that win rate stays consistent. You get small wins every single day accumulated over a long period of time. You're going to make a lot of fucking money. It's how it goes. It's how it works. Don't buy a course, man. Don't buy a course. Watch this video. Watch it for yourself. Go back and then go on the charts and back test it yourself. You don't even have to pay for whatever the membership is of TradingView. You don't even have to pay for that. You don't even have to pay. You could just scroll back in time and say, well, okay, well, Bailey said that this happens. Let me go to the exact same pair. If you look at the time, it's October 13th to the 15th. Up here is August 16th, the year 16, to October 17th. And this is 13, the year 2013. On the daily time frame, EuroGBP Forex.com is the and when you go on the pairs, I don't even know what to call that. When you go on the pairs, you select between all these different things. You have all these. Click on it, man. Damn. Owanda and Capital G, all the broker. That's what I'm trying to talk about. Have all these different brokers that you can choose from. The broker is Forex.com. Sometimes it's different when you put it with all the other ones, and that's it. Go back test it. You'll find the exact same thing, and then go back test it yourself. This is trending right here. How many trades do you think you could have caught? What if you go to the 4-hour instead and not just use the daily? How about this trending market? What if you go on the 4-hour or the 1 hour, or just stick to the daily? How many trades would you caught? I could see right here that you could have caught buys right here in this big, huge level, right, of support. How simplistic is that? I don't even have to zoom in. I can be zoomed all the way out and just see a level and just be like, okay, I'd buy there, and then you'll make money. That's it. You could have bought right here. It doesn't have to be difficult. You can make money trading in this market without it being difficult, without it being complicated. And I think the number one reason why a lot of people fail, besides over risking and all that stuff, I think the number one reason is people make it too hard. They make it too complicated. They come into trading thinking that this is like some super scientific shit, and there's no way you could possibly just buy at big levels. There's a level that's rejected multiple times. I'm just going to buy there again when it comes down. There's a level that's rejected multiple times as resistance. I'm just going to sell. It doesn't have to be complicated, you know? You just go with the trend, find levels, and that's it. Don't buy a course.